Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. And today I'm going to be covering Fiverr. One of the darlings during the pandemic. The stock dropped over 90% from its peak, but I think it still has a bright future. So let's get started with the business strategy. Fiverr is a two-sided marketplace for freelance workers. So you can get everything from graphic design to coding. Thousands of different jobs can be done through finding somebody to do that work on Fiverr. Fiverr generates a fee when a buyer is connected with a seller. Typically, there's a 20% fee that the seller pays, and then there's also a small fee that the buyer pays as well. Fiverr wins as a business by having the most suppliers or freelancers on their platform, which attracts the most buyers. That's the way the two-sided markets work. You need to have both sides of the market being active for the business to grow. Now, since the pandemic, growth has slowed. You can see that in this chart, but this is still a company that is growing and it's also now profitable. So while a lot of fads really fell out of favor after the pandemic, freelance work is not one of those things. Work continues to be more remote with more freelance or contract workers, and I think Fiverr is going to benefit from that tailwind long term. So what is the growth opportunity for Fiverr? Well, in the most recent quarter, Fiverr's buyers actually dropped 9%. But the good news is the buyers that remain on the platform and remain really active increase their spending by 9%. So the way that management puts it, they're generating more value from each incremental buyer on the platform than they used to. The short way to think about this is there's fewer $20, $30 jobs that people are hiring people on Fiverr for, and more jobs that are worth thousands of dollars and can last months in duration. And 68% of their revenue in the most recent quarter came from repeat buyers. So the opportunity for them is to continue to grow into this market, continue to be a critical piece of building a modern business. But of course, there are risks, as there are with any company. Competitors are out there. There are competitors like Upwork. Supply can also go around Fiverr by just working directly with a buyer, especially if a contract is much bigger. Some competitors are also lowering their prices, trying to compete with Fiverr on price. That could impact the company's margins that they're able to get out of each sale. Those risks are not going away, but those risks have also been present for the last decade as Fiverr has grown to the company that we know today. So you see that revenue chart that I showed earlier, that's Fiverr continuing to grow in the face of all of this competition. So what's my prediction? My prediction is this is a company that has proven to be sticky and continues to grow even after the pandemic. So that's why I think it can beat the market at a forward price to earnings multiple of just 12.5 with a solid balance sheet. You can see that here, a net cash balance on the balance sheet. That debt does come due in 2025, but management has said they can either refinance that depending on the terms, or they can pay it off with cash on the balance sheet. Fiverr's market cap, as I'm recording, is just $1.15 billion. So I think that's a really reasonable valuation to pay, especially if they're able to refinance that debt. Management could go out, buy back a significant amount of their shares outstanding at the current valuation, and that just accelerates or leverages that upside that investors would have in the future. So to recap, Fiverr stock is down, but it is not out. This business continues to do really well, continues to grow. It is positive cash flow, and while it may be a risk, the potential reward for Fiverr, I think, outweighs that risk given the price that investors are paying today. Now, at the Motley Fool, your comments make us all smarter, so please comment with your own research and insights about Fiverr and tell us what you want to see next time on Crunch Time. And of course, check out fool.com/invest to get the Motley Fool's top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.